We'll be going over IRS Form 4868, Application for Automatic Extension of Time to File a U.S. Individual Income Tax Return. We recorded this video maybe about 6 months ago, back in October of 2023. I decided to re-record it for the 2023 tax season, since the only version of this form that was available was the 2022 version. Virtually nothing has changed, but sometimes you just want to make sure. Plus, there's a couple of additional details that I left out of the original video that I wanted to cover here. So before we get to the crux of the form, it's important to realize the form is on the first page and all the instructions you need are on the second page and third and fourth pages. So everything you need is on this page. You don't need to go to a separate page to download any instructions. And we'll walk you through both parts, part one and part two, momentarily. So some considerations: you can request a tax extension for filing your tax return one of three ways, according to the IRS. So you can use a paper version of this form, and there are instructions on where to mail this form as well as your payment. The mailing address location does depend on which state or territory or location you live in, and whether or not you're including payment of your estimated tax with that Form 4868. You can also file it electronically using either IRS free e-file using your tax software or through your tax professional. And you can also make your estimated tax payment online through the IRS website. So if you decided to e-file this, you can go to the IRS Free File program, and from there, the IRS has listed several companies that participate in this program, basically for certain taxpayers that have less complexity in their tax returns, who don't need all of the frills and formulas associated with more complex and more expensive tax software. You can use the IRS Free File program, where the IRS contracts with certain providers to generate your tax returns and file them online for free as advertised. So as a general rule, you won't find like TurboTax or H&R Block or like the higher tier big name tax prep companies in the free file program, but you will see companies that have been vetted through the IRS, by the IRS, and do meet the IRS criteria for filing electronically. So if you make a payment using the electronic payment options, you don't need to file this. If you pay part or all of your estimated income tax electronically, you can do that on the phone or online. You can e-file through your tax software. So that's kind of the general gist of the top part of this form. So if you are, requesting this tax extension, you generally get a 6-month extension. You can use this as an overseas filer to get a certain period of time. Generally, if you're a taxpayer who resides out of the country, then you automatically have a little bit more time on your tax return, and then this would add to that already extended period of time. So you do need to do some due diligence to properly estimate your tax bill. You will use this form to calculate and record that, and then as long as you file this by the due date of your tax return, which for 2023 filers is Monday, April 15th. So from the week of from from the date of this recording, that would be a week from now. So we're recording this on April 8th. So you don't have to justify any reason for the extension. The IRS will only contact individuals whose extension requests have been denied. So if you needed every single one of these, you can get some of this information step by step. What I wanted to highlight is the late payment and the late filing penalty. A lot of questions come up about this. So these are two separate penalties that are calculated slightly differently. The late filing penalty is a penalty that is 5% of your tax bill that remains unpaid after the due date. So if you didn't file anything to include an extension and your tax bill was $1,000 and it took you a month to file your tax return, then you would have a 5% penalty of that $1,000 or $50. So that accrues at a rate of 5% for each month or a portion of a month. So whether it's a day late or a month late, that 5% applies. So the maximum penalty is 25%. And if your return is more than 60 days late, then the minimum penalty is $485 or the balance due on your tax return, whichever one is smaller. So for taxpayers who don't owe anything because they've overpaid, you technically won't incur a late filing penalty. Because you wouldn't have a balance due. The incentive for those taxpayers to file on time is to get the refund, because otherwise the IRS is sitting on your money for as long as it takes for you to eventually come around and file your tax return. So the late payment penalty is different. Instead of 5% of the tax due, it would be 0.5%. So that $1,000 penalty, let's imagine that you filed an extension but you didn't pay the bill. So that $1,000 penalty that accrues by the time May 15th rolls around, that penalty would be $5 and not $50. So that would continue to accrue as long as the tax has not been paid up until you reach a maximum of 25%. And these are two separate penalties, but if they both apply at the same time, then technically they kind of overlap so that there's a maximum of 5% in that given month. So if you don't file the extension and you didn't pay your tax bill, then you're still accruing a 5% penalty for that month, not a 5.5%. Now you can avoid the late payment penalty by paying enough of taxes throughout the tax year. So the general rule, which isn't stated right here completely, so you have to have paid at least 90% of your estimated tax bill. You have to, or you can look at your prior year tax return, and if you've paid at least 100% of that, or for certain high income tax filers, 110% of your prior year tax bill. Or if you've paid enough taxes so that your estimated balance is less than $1,000, then you would not be liable for a late payment penalty. You could still be liable for a late filing penalty, but you would not be liable for the late payment penalty if you met those criteria. So you'll want to make sure that when you eventually file that you claim the credit, the tax credit for the payment that you made with this form. So you can find that on Schedule 3 for most taxpayers. Line 10 would be the line where you enter the amount that you submit with this form. So let's go ahead and kind of walk through part 1 and part 2. So part 1, we're going to use our hero, John Doe, and he is going to be completing this form. If he was married, then you would enter something like the spouse's names as they would appear in order on their tax return. All right. So in part one, we completed the taxpayer information that identifies John Doe and his wife, Mary Jane Doe, their address, social security number. So it's important to know that uh, this is the information you're submitting to identify yourself to the IRS. Now, if you've changed addresses recently and this does not match up with your IRS records, then you probably need to update your address in the IRS files, which you can do by filing IRS Form 8822. That's your change of address form. So if you show a new address here, the IRS won't automatically update your record. So you do need to do that to make sure that this matches your record. So in part two, we're going to estimate your tax liability for the year. Let's just say that we come out with an estimate of $12,000. We've made $11,000 of payments. That means there's $1,000 that we're due, and we're going to pay $500 of it, right? So that's pretty much as easy as it makes it out to be. Of course, you can pay the full $1,000, include that in there, and then when you actually file your return, then you're just making that adjustment based on whatever has changed since you made that estimate. So there are two boxes right below this field. You would check box 8 if you're out of the country on the due date of your tax return. Now there is specific IRS guidance on what taxpayer being out of the country means. So the IRS considers a taxpayer to be out of the country if you live outside the United States or Puerto Rico and your main place of work is outside the United States and Puerto Rico. Or if you're on active duty military or naval service. I'm not sure why they made that distinction. But if you're on duty located outside the United States and Puerto Rico, then you are also considered to be out of the country. So what I infer from the form instructions is if you're on a cruise out of the country, if you're on an overseas vacation to Europe, that doesn't constitute out of the country the way the IRS interprets this rule. So if you're considered out of the country, you can automatically pay the tax and file the return for the 2023 tax year by June 17th, 2024. So generally speaking, if the 15th of a month falls on a weekend or a federal holiday, then it would be the next business day. And as it turns out, June 15th happens to fall on Saturday this year. So that means June 17th is the Monday that follows that weekend deadline. So if you are looking to meet the bona fide residence test or the physical presence test because you're out of country and you're a U.S. Citizen or resident, then you may qualify for special tax treatment if you meet those criteria. And there's a separate form called IRS Form 2350 specifically to apply for an extension of time to file your tax return based on that criteria. So this is for overseas U.S. Citizens who are residing overseas who are looking to meet either the bona fide residence test or the physical presence test for tax privileges. So instead of filing 4868, you would file IRS Form 2350. Now, a couple of things when we're talking about the tax penalties, you'll note that any outstanding tax after the deadline will accrue interest, even for people that qualify for the 2-month extension, even for people that are not subject to a penalty, either the late payment penalty or the late filing penalty. So the IRS calculates interest based on prevailing interest rates, and you can find the current interest rate for by quarter on the IRS website. So one last thing I did not cover before we started this video is that As a general rule, most individual taxpayers are calendar year taxpayers, so you can leave this top part blank. But if for some reason you're a fiscal year taxpayer, like if you're a sole proprietor on Schedule C and you have a business that operates on a fiscal year schedule, that would be any tax year that ends at the end of a month other than December. So for the federal government, a fiscal year runs from October 1st of a specific year to September 30th of the following year. That would be a fiscal year. A fiscal year ends in any month, so it could be June 30th, it could be March 31st, and then, or yeah, and then, so if it starts on April 1st and then it runs through the next March 31st, that would be a fiscal year. So if you're a fiscal year taxpayer, make sure that you include the beginning and ending dates on this form. So that's about all we have for this updated video. I will keep a link to the other video posted in the archive section for people who want to look through previous year comments, but not a whole lot has changed. This is a fairly standard form that most people use if they're filing a tax extension. So we'll put links in the show notes to the articles and videos of different forms and schedules that were referenced here. If you want to check the article out for this form, we'll put a link in the show notes for that. Or you can go to teachmepersonalfinance.com, type in IRS Form 4868 in the search bar, and you'll see the article pop up. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions, comments, or if there's a particular topic that you would like to see updated in a future video, please hit me up in the comments section. Thank you very much and have a great day.